Welcome to County Portal, your simple source for local government services and public records. Let's get started.
What is the lowest payment the IRS will take on your tax debt? That's a huge question for millions of Americans, and the answer isn't a simple dollar amount like $10 or $100. The real answer is, the lowest payment the IRS will accept is based entirely on what they believe you can afford to pay. It's a number unique to your specific financial situation. Let's break down the main ways this works. First, and this is the one everyone dreams about, is the offering compromise, or OIC. This is the famous pennies on the dollar deal. An OIC is an agreement between you and the IRS that allows you to settle your tax debt for less than the full amount you owe. But it's not a magic wand. To qualify, you generally have to prove serious financial hardship. The IRS uses a specific formula to determine the lowest offer they'll accept from you. This is called your reasonable collection potential, or RCP. They calculate this by looking at your income minus your necessary living expenses, and then they add the value of your assets, like the equity in your home or car. If that calculation shows you could pay, say, $5,000 over the next few years, then that's likely the lowest offer they'll even consider, even if you owe $50,000. So for one person the lowest payment might be $5,000, and for another, it could be $500. It all comes down to that RCP formula. The second option, which is technically the lowest payment possible, is $0. This is called currently not collectible status, or CNC. If you can prove to the IRS that you have no ability to pay your basic living expenses, let alone a tax bill, they can place your account in CNC status. This means they will stop all collection efforts against you, no wage garnishments, no bank levies. However, this is not a permanent solution. Your tax debt doesn't disappear. It continues to grow with interest and penalties, and the IRS will review your financial situation every year or two to see if you can start paying again. The third common option is an installment agreement. While you'll still pay the full amount you owe over time, this is about getting the lowest monthly payment you can handle. The IRS can be flexible and will work with you to set up a payment plan based on your monthly budget. For some people, this could be a very low monthly payment that stretches out for years. The key thing to remember for any of these options is that you must be in full compliance. This means you have filed all your required tax returns. You can't ask for a payment plan or an OIC if you have unfiled returns from previous years. The process, especially for an offer in compromise, is complex and requires a lot of detailed financial documentation. It's often a good idea to seek help from a qualified tax professional, like an enrolled agent or a tax attorney, to navigate the paperwork and increase your chances of success. So, the lowest payment isn't a set number, it's a personalized calculation of your ability to pay. Thank you so much for watching. If this video helped you understand your options a little better, please give it a